Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello and welcome back to the podcast, or thank you for joining for the first time, whatever brings you here. So I hear from some clients that they're accidentally finding me because their fingers are pushing stuff on their phone they don't know about. I love it. I absolutely love it. I talked to an awesome guy the other day that doesn't know how to use his phone, but accidentally found the podcast, and here we are. And this is something else that I hear a lot, and I am sure you guys, if I took a poll, I am certain that there would be a large number of you that the first book you've read since high school is Farming Without the Bank. Maybe you've just started listening to books. And this particular guy said that not only has all of this caused him to read, but it's actually made him read other things because he's investigating everything, right? And looking into everything. And I think it's great. I think that's absolutely great. We so do not like school because it's about stuff we don't want to learn. And when we find something that's interesting, we want to read it. So it doesn't matter if you're reading it, doesn't matter if you're listening to it. How many of you have not listened to a podcast, maybe read my book, and now all of a sudden you're like the podcast king and queen? I never listened to podcasts, and now I absolutely love them, and I find that I actually read less because I'm so busy absorbing information from podcasts. So thank you for being here, and please share this. You don't know who else is out there in that same situation, because there are so many people that tell me, I've never read a book, I've never liked finance, whatever, until they came across this concept. Because it's not hard. Finance isn't supposed to be hard. So today we are going to talk about, the last podcast, we talked a little bit about life insurance companies and the setting things up because we went over a chapter in Nelson's book. This podcast, I'm going to continue some of that conversation because this has come up in the last couple of weeks as well with clients, and that is dividends and interest rates. And so many people automatically are like, well, what's the interest rate with your company, Mary Jo? What are we borrowing money at? And we have to put things into perspective because every single insurance company gives a different rate. And those different rates are built into the policy in some cases. Some cases it's variable. It really depends on the company. I have one company that I write with. It's a set rate. It's never going to change. It's contractual for loans. Other companies are not contractual. Some companies you're borrowing at 8%. Some companies you're borrowing at 4%. And so most people will say, well, I don't want to borrow at 8%. And I just had a client yesterday from this recording. I just had a client that said, a new client that has a bunch of money in whole life insurance, which was super exciting to see. And they had borrowed some of it. And they have been listening to the podcast. I'm sure they are going to listen. But they've been listening to the podcast and thought, well, we did it wrong. We didn't pay it back correctly. And then, the interest rate, I think they said the interest rate was about 7%. And so obviously right now, at the time of recording, interest rates are low and they're nowhere near 7%. So why would I borrow at 7% from the life insurance company when I can go to the bank and get it at 4% or 5%, which is where most of their loans were? And as we were talking, I said, well, when you borrow money from the policy, you get to decide how you want to pay it back. I was telling him how my companies work. And I said, I'm sure you experienced that when you borrowed money from the whole life policy that you have now. I said, they didn't ask you when you're going to pay it back. And he said, no, that was the most amazing, awesome thing because they didn't ask, when is he going to pay that back? There was no paperwork to fill out. There were no terms and conditions. He said it was almost worth it just for that. Well, I would say it was worth it just for that because there are no questions. Right now, my husband and I are trying to buy a new property. And guess what? I'm going to maybe have to give my firstborn child. Like, it is absolutely insane. I am just like, I am short just a few $100,000 to just buy the property outright because it's just absolutely ridiculous to me. If I would have all the money I need in a life insurance policy, I wouldn't have to go to the bank for this property. But I don't. I could have had that money. We could have closed. Deal could have been done days ago. I could have handed him a check. He could have handed me the keys. Done. No appraisal necessary. No inspection necessary. Right? That's all stuff that the bank makes you do. You have to get this appraisal. You have to wait forever. And don't even get me started on appraisals. And so those things, if I could just go to the policy at 7%, and I have 100% control of that loan, I don't care if the interest rate would be 10%. I have 100% control of that loan. I didn't have to ask permission. I didn't have to ask when that was going to be paid back. And we have to remember, if we are with a mutual company, which these people were, they have life insurance with a mutual company. So if you have life insurance with a mutual company, and that mutual company is going to charge you interest, in a roundabout way, you are getting some of that dividend back because you are part owner of the company. No different than if you own the grocery store and you go buy peas off the shelf and there's a profit to the grocery store, you pay the expenses, the profit comes to you, the owner. You didn't get all of it, but you got some of it. Would you not want to do business with your bank instead? That is exactly why Nelson calls it become your own banker. We want to do business with our bank. That really should be the first place that we go, regardless of the interest rate. Life insurance companies like to also get in this tug of war for, I'll use better words today. They're going to get in this tug of war of dividends. And there is one big company out there that they love to throw that in people's faces. Well, we have a 5% dividend. We have a 5% dividend. We are a better company. Oh, for Pete's sake. You have a 5% dividend and you're lending money at 8%. You better darn well have a 5% dividend. And that's a gross rate, not a net rate. When I talk to clients, I am going to give them a possible net rate. Some companies don't even publish their dividend rates because it is so silly that that's the war we're getting in. That is a bonus on top of the guaranteed rate you're earning in the policy. Okay? That is a fantastic, we got it, but they do not have to contractually pay a dividend. So Mr. Huge Company out there saying, we've got a 5% dividend, okay, fantastic, but you don't have to contractually pay for it. So if you sold me on that and you didn't pay for it, now what do you have to say for yourself? Dividends are a bonus to the policy. They are not contractual. They do not have to be paid. Most companies have paid them for 150 plus years. So fantastic, they're there. But the dividend is also reflective of the amount of money that the company makes. And if the company is charging you 8% interest, they better have enough money to pay a higher dividend. It is all relative. This particular company that this gentleman was borrowing from, I don't know a whole lot about, but they should have been able to pay a fairly decent dividend, or maybe have a higher dividend. When insurance companies get into a position where they are trying to outshine the next company with a dividend. That is alarming to me, because where are those dividends coming from when we have a really low interest environment right now, and bonds and real estate's probably doing okay. Who knows with COVID, but bonds are really low right now. And so if we have a bond if they're getting low interest rate bonds, where are we getting these high dividends from? Real estate. They're doing more risk investing. Okay. When I look at a life insurance company and I look at their vital signs report, I can kind of see exactly where they have their investments. If they have taken more money from the bond portfolio and put it into higher risk investments, that also leaves the company at risk, just so that they can say they're paying higher dividends. Or if they've left all the money into low risk investments and they say they're paying higher dividends, does that mean that they are actually taking money from reserves to pay dividends just so they look good on paper so they can sell more insurance? We have to look at the big picture of what's going on. At the end of the day, it is not about the dividend and it's not about the interest rate. It's just not about that. It is about liquidity, control, and guarantees. Okay? At some point, yes, mathematically, 2% is less than 6% or 7%. Absolutely. But what is the price of control? There's that American Express that says this is priceless? For me right now, I would pay 10% to a life insurance company so that I could go buy this property and have no questions asked of me. The amount of explanation that I have had to do with the banks and the hours of paperwork just gets on my very last nerve. I hate every second of it, because if I want something, I want to just go buy it. And I have created a pool of money for many years waiting for the right opportunity to come. And I have a ton of money as a down payment and I am still getting questioned. That's ridiculous. The life insurance company is not going to ask one single question. I go online or I fax in a sheet that says this is how much money I want. They send it to my account. No explanation of how I'm going to repay that. In fact, we are taking the majority of our down payment from our life insurance policies. No question. I don't even have to check with the companies to make sure that's going to happen. Thank goodness, because I'm spending all the rest of my time at the banks. I will pay 10% all day long to the life insurance company because I don't have to answer questions and my time is worth money. And the bank is taking a whole lot of my time. Now, I do appreciate the lenders over there. I appreciate the people. I appreciate the opportunity to go there. And yes, after 11 years of doing infinite banking, I still have to go to the bank. I am not 100% borrowing from my policies because I too am still building a pool of money. So those of you that think that you should be away from the bank in 10 days, that's not going to happen. It's going to take some time. Okay? And we want to make the bank plan B. Well, guess what? The bank is the majority of my stuff is coming out of life insurance. And one lender I talked to, I'm just going to share this conversation because I think it's important. He said to me, I said, well, I've got X amount in cash value of whole life insurance. Whole life insurance, that's a terrible place to put money. And I said, you do realize what I do, right? He's like, well, term is a lot cheaper. And I said, well, it's about liquidity of money. If you want me to invest the difference, I don't have liquidity of that money. I have interrupted growth. Why would I do that? And he said, well, how much are you paying for that death benefit? I said, well, that's kind of hard to say because it's not all on me. I have policies on other people's lives. And then he changed the subject because I have lost him. And he didn't either know what I was talking about or he didn't know what to ask next. Because now how do we justify that? Because it brings us down a whole different avenue. If I have policies in other people's lives, he wanted it to just be on my life. So then he could compare cost of insurance, right? When in fact, cost of insurance is actually more expensive in term to 95 than it is to whole life to 95 or to 121. So it was interesting conversation to have with a lender who went to school for accounting and thinks that he knows everything because he went to school for accounting. And these people that go to school for accounting apparently are told to buy term and invest the difference, even though they're going to school for accounting and they're not actually going to school for investing. But should we be believing every single thing that the schools are teaching us? And then we get out of school and say, well, this is what I learned in school 25 years ago, 30 years ago, 40 years ago. This is what I learned in college. Really? Because things don't change over time? Because everything that we paid for as an education is gospel? I don't think so. But then don't turn around, tell me that whole life is bad, but then he wanted referrals. Yeah, Mary Jo doesn't work that way. That's not how that game is going to get played. So we moved on to a new lender. So and I have the new lender's amazing. She is a rock star. Love her. Makes it happen. Those are the kind of people that you want to work with. If you have to. I would prefer to not have to. Let me tell you, every extra penny we have will now be going into even more life insurance because I don't want to have to go through this again. And I am not any different than anybody else. The day that you take a loan from the bank is so super painful. And it's amazing how we forget that pain until the next time we need them. Right? You guys are borrowing money every single year. And every single year it's a pain in the butt. But within a couple months, once we got the money, we forget about the pain. And then we just go back to what we're doing. If we can remember that pain and put as much money into life insurance as possible, guess what? We wouldn't have the pain. We would not have the pain. The hassle. It's not really painful, but it's a hassle and it's annoying. I don't care if the insurance company wants to charge me 10% interest. And people say that all the time. Well, is this a locked in rate? What happens when interest rates go back to 25%? Well, okay, so interest rates go back to 25%. Nelson was borrowing from his policy between 5 and 8% when interest rates were 23. So if interest rates go back to 25%, if I can have a policy loan at 25% that I control, would I rather have that loan that I control at 25% than a loan that the bank is controlling me with at 25%? All day long. Stop worrying about the interest rate alone because it is about liquidity control and guarantees. And you guys have heard me say that again, and you are going to hear me say it over and over and over and over. Liquidity, control, and guarantees. I should have that put on a t-shirt. Along with Nate's amazing saying that it's easy when you quit making it so hard. Those two things are super important to keep in mind. And it doesn't matter what the interest rate is if you have liquidity and control, because it is priceless. Absolutely priceless. And if you guys want more of this information as far as, okay, what is this client doing? What's that client doing? Tune in to my Facebook page on Thursdays at 8:30. I am doing Facebook Lives and they are recorded as well. So you can go back to Farming Without the Bank on Facebook and you can see all the Facebook Lives that we've done in the last couple weeks. And I do my weekly review of what I've gone over and how I've helped people and what we've talked about and what they're doing. All of that is on a Facebook Live. You are going to get a ton of information from that as well. So tune in there if you want more information on those sort of things. I even throw tidbits of this kind of stuff in there. So if you want more information, that is a great place to go. Hopefully we will have those on YouTube shortly so that you can go to YouTube and see them under Mary Jo Irmen. Okay, that is all I have for you today. Don't lose sleep over interest rates and don't lose sleep over dividends. What you should be losing sleep over is an agent that doesn't understand what they're doing, but selling you a policy. That, my friends, is what you should be losing sleep over. If you need anything, if you have a comment or a concern or a compliment, I am happy to take them. MaryJo@withoutthebank.com. You can email me there. You can message me on Facebook, whatever. If you have a topic that you want addressed, happy to address it. Okay, guys, have a fantastic day, and we'll talk to you in the next episode.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.